And welcome traders to Polaris Trading Group's PTG University. And this is our first video of 2016. And what we'd like to do here is review the PTG Auto Trade Assistant, which is a new tool in our toolbox. We're going to do a replay video of a discount long that took place in crude oil, the March contract, yesterday, Friday, 1/22/16. The chart size that we're going to use is a 250 tick chart. Okay, so I switched over to the 250 tick chart of the crude oil, and we want to again demonstrate our signature discount CCI crossover system utilizing our Auto Trade Assistant. We're using the Sierra Chart platform, but this particular tool is available currently on NinjaTrader as well. So what we'll do here is we'll start the replay and walk you through the current setup here. Alright, so again, what a discount is, it is a pullback within the context of a developing uptrend, and we look to get the first pullback, this is what this particular trade is about, and we look to have the auto trade put us into the trade automatically. It will auto position size as well as scale out automatically. So here's a setup developing. Okay, so let me just pause that and just zoom in here a little bit, and we'll describe to you what we have going here. So this is a discount signal, which means is a buy. It has auto placed orders to buy 4 units at 31.78, staged an order to buy 4 using a buy stop. The stop loss is going to be below the low part of the pivot, and then we have it set to scale out at 3 different levels. One at the risk-free, and the second level is target 1, which is a 2R value, and the third level is target 2, which is a 3R level. Okay, so let's continue with the replay. And I'm going to speed the replay up a little bit so we can expedite the video. This is a trade that we did take live in our trading room in front of our members in a live account. Okay, so as this is unfolding here, again, the orders have been pre-staged automatically by the system using a buy stop, and as soon as it clicks through that 31.78, it will execute the trade. Okay, it should execute here momentarily here. And there it is. So we're long 4 units at 31.78. Our first risk-free level is going to be at the 31.88 level. And currently we have it set to scale out 25% of the position, so that's 1 contract each at various levels. Alright, so executed on our first contract. Now we have the ability to designate how we want to scale out. This particular one is just simply on a quarterly 25% per R value, but we can user input can switch that over to anything they would like. Now what we also have a feature in here is once we get to the risk-free level, we have what's called an auto break-even, and the stop is moved automatically to the entry once the first risk-free level has been achieved. So right now We're getting a pullback here. All right. As you can see, let me just pause this for a quick moment. We did get stopped out on the balance of 3 contracts. I remember we originally bought 4, sold 1, stopped out on 3. And again, what we want to do with this auto break even is make sure we protect our position in the event we get a pullback. Now, many times the markets exhibit the action where they break out and they come back and hold the breakout point. And this is a case in point in that. Now, the other option that the trader has is not to use the break-even, auto break-even, but rather leave the original stop under the original low. Now, that is a user designated selection, but in this particular case, what it did do right here is we had a new discount, as you can see here, at 31.87 after getting stopped out. Executed us back in. Again, all done automatically by the computer as it meets the criteria. So as you can see here, 3 units in, scale of 1 unit at the risk-free level, which is 1 R value. All right, executed that, executed the second lot. All right, in short order. Okay, so you can see that. And then we have, again, the auto break even. The stop has come up to the break even level. And we'll just let this run out. This was a very, very good trade. Oil had exhibited breakout tendencies on Friday, and we caught a couple of very good trades in oil on Friday. Now, oil is a contract by which, okay, let me just stop that. We got our third exit here. Oil is a contract by which it is very, very, when the price starts breaking out, it's hard to get on board. What the auto trade does for us is we've made the decision to look for a long trade opportunity. We've pre-programmed what the criteria we're looking for. And then so all what we really need to do with our auto trade is simply enable it. So in the top left-hand corner here, you can see that we have where it says enabled buy only. So what we want to do is we only wanted to be searching for and looking to execute long trades. We had a max dollar risk in this example of 400, but that is user definable. And this is a turbo style trade, and this entry style itself is a buy or sell stop. So in this particular case, we're using a buy stop for entry. All right, and then once it's executed, we just let the trade unfold, and it works very well in momentum markets. And as we all know, crude oil is a very strong momentum type contract, and this is a way to benefit from the momentum, staying on the correct side of the market's direction and tendencies, and then using the automation capabilities that some of the equal to some of the larger hedge funds and HFT type folks are using out there themselves. So we want to tap into that power of the auto trade capabilities that many of these trading platforms that we use have the ability to tap into. So this is an auto trade assistant. It is not a black box, folks. It is an assistant. It is the trader designates when they want to utilize it and turn it on, and once they have enabled it, then they simply allow the computer to do its job to execute for them. Once the trade is executed, the trader has the ability to manage it manually or let it unfold as we did here in this example. All right, so that was the example for crude oil in the March contract. That was trade date Friday, January 22nd, 2016. And then lastly, what I'd like to bring to your attention is on our website, we have a section of performance report called the tick count report, and you can visit directly right on the website. It is a public document. And within the context of the public document here, it displays our historical discount and premiums, as well as those taken on the auto trade, as we've just demonstrated here. And for the month so far in January, we have, even though the markets have been down quite strongly, on a very poor start. We have had a very strong start with our various opportunities and premiums and discounts. So for the week ending 1/22, yesterday, Friday, the first 3 weeks of this new year has been a very, very strong performer for us. So now these are ticks, meaning 192 ticks for the first week, 361 ticks for the second week, and this past week, 291 ticks. There is in the S&P. And then on the right-hand side here, we have that in crude oil, 146.92 and 161 respectively. The numbers that are highlighted in yellow are the totals between the two. Again, this particular tick count measures only trades, single lot trades, from the entry point to the risk-free level, which is a 1R value. It does not measure anything beyond 1R, or the risk-free level, meaning target 1, target 2, target 3. So this is a very conservative report, and as you can see here, the summaries for this past year have been quite strong here. So again, the charts here show the ES discount and premium tick count per month since we began the recording back in May of 15, as well as for crude oil. Now again, the tick count bars here represent a raw tick count based upon one contract. But if you were to go down here to the cumulative monthly P&L totals, this is a normalized graph. Normalized means 3 contracts per trade. So again, this still measures only to the risk-free level, that 1R value. So as you can see, the progression of cumulative P&L since we began this in May is, we believe, quite impressive. And the beginning start of our year here at 2016 is very encouraging as well. What you can do here, once you're in the website, you can actually view the details of the trades. This is a summary table. If you click on View in Google Spreadsheets, this will bring you to the actual spreadsheet, and again, you can see the summary here and so forth. But what's more important that you want to look at is I want to view the trades that occurred between, let's just say, January 18th through the 22nd. So what we would then want to do is click on the ES tab. And once we get to the ES tab, you will actually be able to look at the details of the trades. So for S&P on 1/19, of course, Martin Luther King Day was the 18th, so we had market was closed. On the 19th, you actually see the time of the trade. This was a premium condition. How many ticks that it generated. Again, a single contract only to the risk-free level. And you can see how many opportunities we had. We had 14 opportunities. Now, these represent opportunities, not necessarily actual trades, though many of them our members as well as myself do take. But these were the total number of opportunities presented to everybody equally. So 14 trades, or 14 opportunities. There was 13 winners and 1 loser, and we have a accumulated P&L there. So what our members are able to do is go back and review specific trade setups, whether they were taken via the auto trade or taken manually. So a lot of transparency here, a lot of detail, all right, in what we try to present to everybody equally. And then here's the trades for crude oil. All right, and again, you can run down those, all right, by visiting the website and going into the spreadsheet. It is a public document, so we do welcome and encourage everybody that's interested in the PTG methodology and the discount and premium setups to come in, take a look, all right, and knock some tires around. Okay, and just finally to close out, industry regulations that do require that the video that we just displayed to you and the performance table that we've just highlighted is basically presented in a hypothetical performance result basis based upon the NFL compliance rule 2-29. So past performance is not indicative of future results. So again, we encourage everybody, come on, take a look, take a free trial here at the Polaris Trading Group, see what we're doing, and feel free to contact me at David at PolarisTrade tradinggroup.com if you're interested in speaking directly to me, and we'd love to see you in our trading room, and enjoy trading, and have a great 2016, everybody. Thanks very much for your attention.